Ira Epstein, and here we are, October 29th, 2022, with our weekly wrap-up for our SPDR ETFs. Now, the week has been one where the market is in anticipation of next week's FOMC meeting. The marketplaces, at least the analysts, seem to think 75 basis point hike November, this coming meeting, then 50 December, then between 50 and 25 January, and after that 25 until you get to between 4.75 and 5%, and then it's over. This is based on the assumption that CPI numbers stall and come down, and that the jobs market weakens. So far, none of that has occurred. If you looked at the core PCE index that just came out, that number's still running high. If you looked at personal income versus spending by the consumer, he is both making more money and spending more money. So those parts aren't working. As for the inflation numbers, I see gasoline prices up. I see other market prices up. So I don't know what they're seeing. If you looked at the cost of food, it's up in the futures market on all the meat products. Rents, they are coming down. Home prices have crashed. There's no other word that I think makes sense other than the word crash with it. So that part is good, and I think that is something to consider. Now, I want to finish up with our Freeport before we move on to something else. And as you could see, a lot of sideways action. The event taking place is the London Metal Exchange has stopped now its commentary. It ended on Friday as to whether or not Russian metal should be banned from trading on the LME. China's in favor of keeping it because they're taking a massive amount of copper out of LME warehouses. Okay? But the rest of the world doesn't want to deal with Russia. If anything, the situation's getting even worse. As you understand it, you'll read today that the Russian fleet in Crimea was attacked by 9 unmanned drones. Damage not severe, but Russia's immediate retaliation was, since the fleet was attacked, they are suspending the exports of grain out with free passage, clear passage, if you will, out of Ukraine to the rest of the world on the grain. Okay, who are they really hurting? Well, number one, you know what they're doing. They want to break the back of Ukraine by destroying infrastructure, no electricity during the winter, no heat. Let Mother Nature do to them what the Russians did to the Nazis in World War II. Let Mother Nature finish them off so they can pick them off and make the going and break the will of the people and whatever it is. It worked in World War II to the Russian forces. It could easily work here. The difference this time is the West is supporting the Ukraine, and we will see if that's it. But this is the problem, okay? And if the grain is shut off, what does that mean? It's just more things. Certainly for the wheat market, that should be a bone of contention come Monday when the market's, actually Sunday night when the market's reopened. But as for the copper market, Russia is still having its copper taken by the countries that favor doing business with them. Okay, there's not much you can do about that. I mean, in all honesty, folks, that's just a powerful event where if China wants to keep taking their product, they're going to, and that'll keep the war effort going there. That is good for Freeport. Any way you want to cut it, because whatever China takes from one source, there's free for the other for the rest of the world. In addition, if the markets do believe that the United States is coming to the end of interest rate hikes sooner rather than later, and that our economy can rebound because of that, why, copper's cheap. Things you got to look at. And as the U.S. goes, so go other markets. In terms of the swing line, you got higher lows, higher highs, bullish. In terms of where the market's at in relation to the 18-day average, bullish. The market's over it. Therefore, the bias is up. We have the trend up. We have the bias up in the market. Next, we look to see where resistance is. And I believe that this week, the market took its profit. I think the pros, if you were sitting next to me, I'd have jabbed you with my elbow. Hey, you got to take your money off the table at 33.61, the upper Bollinger Band. Why? Because if you've taken my charting course, the Enhanced Bollinger Band, you have a market that's not embedded coming up and you hit that number. That's what the pros do. That's what I teach, and that's where I think they came out of the market. And I think that if you break in the market now to 29.53, you can buy it again. You can have a straight stop at right under this low of 27.50, so 27.49, looking for again the challenge of the upper Bollinger Band at 33.61. In KBE, you have a lower low, higher high. There is no trend in this market. Momentum is trying to turn up, bias up, but you're void of a trend. I think you're basically caught in sideways action. In XLI, the trend is up. Higher lows, higher highs, and you have momentum. So you got the bias up here over the 18-week average. Is the market then a buy on a weekly basis at 90.93 with a straight stop at 82.75? Well, that's almost a 10% risk. I think it's too big. I would pass on that trade. Doesn't mean I'm right in doing so, but I'd pass. On the energy sector, what's the one performance that's been all week long? If you watch Chevron, Exxon, all these numbers, what they make between them, $36 billion. Come on, these are just monstrous, and that's why this market is still running to the upside. However, momentum is up. The trend is nothing. You've got a lower low, higher high, and you have bias up. Not a buy on my work. Uranium. I'd like to replace uranium pretty soon with lithium. If any of you know a good ETF or a spider that has good volume and there's a nice play on that, would you send it to me at Ira? We'll make it this way: I Epstein, IEPSTEIN at Linn, LINN, I'd really appreciate it. Maybe we can replace this with that. I think it'd be a better play. GLD, still in the bear camp. How can gold really go anywhere as long as interest rates keep going up? I don't care if they go from 50 to 75. They're going up. That's a big headwind for this market. Therefore, if you don't take out this week's low first, and that low was 152.50, go short. I could see you selling between 168.75 and the 159.60. Let me do this again. Between 155.73. Seeing colors on my portable computer is not easy for me. And the 18-day average at 159.60. That's the zone. What would you do? Do we have an embedded reading? So let's take a look. 1, 2, 3. You got it. You're out if you lose the embedded reading. Don't sell if you first break through 152.50, but otherwise sell the rally, being out if you get a reading over 21. You may see starts and stops on the computer. I'm in the mountains. I am truly in a big forest where we're about 3,000 feet, and we have very limited internet, so I'm doing my best for you. Okay, apologize for that. In any case, in the gold miners, this is the resistance area. If the market can clear 26.11, and if it can close in over the 18-week average, then wherever the Bollinger Band comes in is your next objective. I don't see anything I'd want you to do in this market. In ARC, so we have gotten a signal to what? Well, do we have an embedded reading? Let's take a look together. Not there. Week 1, both numbers under 20. Week 2. This will be the week that determines if the market's going to embed or not first. Number 2, you have a pattern of higher lows, higher highs, but you're under the 18-week average. The bias down, trend up, it's just neutrality. In Apple, the market has come back and gone back to where it likes to make decisions. I'll give you something that would be very negative. If the market gets underneath this week's low of 144.13, I'd then be telling you go short, looking for 132.30 with a stop over whatever the high of the week is to that point in time. Buying it? No, there's nothing there to do it. In Tesla, this is an area to be having covered shorts. That's all that it is. It's not a sign to go long yet. You have an outside week up, and that means if this low is taken out this week at 198.59, you open the door up for 158.10. If it's not, you might be going back to the 18-week average. And if the market gets away from this low momentum, I might even consider a short sale in it. In Meta, you're in a meltdown and an embedded reading. We made some nice money on this stock, as you know, back over here. And yes, we left, oh, actually, it's a weekly chart, so it would have been back over here. I apologize for that. Catching this play. And I didn't go through the earnings and so on, but that's typical of me. I don't like to go through the earnings. It's a big report that can change charts. It's no different than an FOMC report. So now the market's in a meltdown. You don't want to sell outside of a Bollinger Band. That's not a smart move. Wait for rallies back into it, and then we'll address it. TLT, you're finally to the right-hand side of the Bollinger Band. Now, like the Fed goes into a blackout a week before the FOMC announcements, I go into a blackout. I don't want you to trade TLT or BND, any of those markets now until we get past whatever the Fed does. It all changes. That's the problem that you have. That's my news. This is where this ends. So I want to remind you, I think this one of the smartest things you can do is make your move. Learn how to work with these embedded readings. They're so important. This type of break, hugging it every week, means that when you get a rally, you'll say, well, it's going to be big. That's not what it's saying. It's saying this is a well-entrenched downtrend. The rally should be sold. I'm Ira Epstein. Have a great weekend.
Welcome. I'm Ira Epstein, and I'm here to talk about my enhanced Bollinger Band course. Now, many of you have taken my regular charting course, and if not, you might think you know something about Bollinger Bands. As you know, Bollinger Bands are an algorithm designed to keep the market trading within it 95% of the time, and on a chart, it will offer on the top part resistance, on the bottom support, and the idea is the market will travel within them. We know that sometimes it latches onto that band, goes up or goes down. Well, how do you play with that? Can you pyramid the positions off that type of thinking? Well, I've applied all three of these into 13 different videos that teach you my concept of it. And from that concept, you're able to work with weekly charts and or daily charts. The 13 videos, each about 7 minutes long. The idea here is not to put you in school forever, but to teach. Now, if you haven't tried my complete futures research, I throw that in as well. Whether you've tried this or not, I think it's worth taking a look at. I think you're going to learn something from there. That research, by the way, covers twice daily market updates for you and access to what I call window envelope numbers, which I think are very important when looking at these Bollinger Bands. The next part is a trial to our charting software so you can make your charts look the same way that mine do. It's that simple. Where do you go with it and how do you get all this? It's simple. You go to our website, www.iraepstein.com. If you go to the word education, everything you need is answered there. You can also call my staff. They'll be happy to help you get set up. I'm Ira Epstein, on the road to your education.